Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, December 21st, 2015. Well folks, another day, another profit here. I want to go over this trade setup because again, you guys can learn how to do exactly what I do, make literally hundreds of percentage points a year on swing trading. And again, swing trading is where you buy something and hold it for a few days to a week or two generally. That's what you're looking for. And this latest trade was on US Steel, and it was just a perfect setup. First of all, if you go back a ways here, I bought US Steel down here and sold it on this big pop. We made about 20% on this trade. But what I do, anytime you have a big move off 52-week lows on the chart, you want to look for a retrace to buy it again. Because generally when you're coming off a multi-year, multi-month pivot low, and you make a substantial percentage move up, you will look for a retrace, and it's a bottom in the stock, so the retrace is a buying opportunity for another move up. And I want to show you exactly what happened here. So we made the first move up, and we got about 20% out of that trade. Then as it came down, notice how it chopped here, and then it retraced right into this level. So now think about this. My first initial buy where we started playing this stock was down here. All right, so we made that big move up. So what I'm looking for here is a relatively big retrace down to buy it again. Now, you're not going to generally go back to the lows here. If you go back to the lows, that's actually a bad thing. If it can go all the way back to the lows and do a full retrace, meaning that it goes back to where you initially bought it down here, that's a negative. That tells you it's probably going to go lower. If you get a partial retrace of, let's say, a 0.618 Fibonacci level corresponding to a pivot point on the chart, that's exactly what you're looking for. So again, notice this retrace here, okay, right into this about 0.618, 0.75. Notice this little pivot low. So if you look at this, you had a move up, bull flag, and a big pop, and then this was your first pullback low. Look at that level, put a trend line right there, and that gave me my second entry opportunity. Look at that, right down here. We picked it up at $7.50, and then look at within literally 2 days going into this week, so you had last Thursday when I bought it. Friday was up strong, obviously, with the market getting hammered. That's amazing to see. That's good relative strength. And then today I sold it right here at the highs on this move. Why did I sell it right here, folks? Very simply put, look at that pivot high, extended move short term, take your profits and run. Not to say it can't go higher in the coming days, but in all fairness, I just made another 15% on the stock. So literally 35% gain on US Steel in basically a week and a half in two separate trades. And again, it's very simple, right? I mean, many people look at this and say, oh, how do you pick these lows and highs? I mean, it's very simple. Know your fibs and look for your pivot points. So here was the move up. Here was your first retrace low, big move. You pull back and you get down to this low. Think about risk reward. Your reward is all the way up here, maybe as high as this point. Your risk is only back down to here. You would stop yourself out if you took out this low. So now you have a very wise risk to reward, risk versus reward trade setup into a fib level, into a pivot low. It makes sense. And it's all about thinking logically. Too many people in the markets think about trading in terms of emotion, fear and greed. The stock's going up 10 days in a row. Oh, I'm missing the boat. I got to buy it up 10 days in a row. Are you on crack? Seriously? That's what you're going to do? You're going to go to the jeans store and when they mark the jeans up 500%, then buy them? No, you wait for them on sale. All right, you look at it and say, last week the jeans were priced at $100. Now they're $50. Yeah, this is awesome. I'm going to buy them today. That's what we do, but people don't translate that into swing trading or investing. And that's the major problem, is that it's emotion-based for most people. If you take the emotion out, there are tons of profits, literally millions of dollars, to anyone who learns this and utilizes it. And that's what we do here at InTheMoneyStocks.com, folks. I mean, it's just that simple. Here's our website, folks, and I want to show you the track record. Here's the Research Center. This is where we give out this trade, and I gave out this exact trade time-stamped and everything. And here it is right here. There's a 7-day free trial. You want to see the track record, folks? I just had that added, the US Steel trade, latest trade added. Here it is right here. On the 17th, which was last Thursday, 750 entry, exit 860. Today is the date we exited, 14.67 gain. And look, just a few days before, we had another 2-day trade, the 8th at 699 to 824 on the 10th, 17.88%. I mean, think about that, folks. Over 30% net gain in essentially a week's period of holding US Steel on two separate trades. And look at the net gain here. Now, almost 880%. And again, I always say that percentage is all our gains added up minus all our losses added up. So it's still amazing, but right, I mean, theoretically, you're never going to put all your money in real terms, right? You're never going to put all your money in every one trade. So what I like to say is, let's assume you're the most conservative trader in the world. What we recommend doing, which is just 10% of your portfolio in each trade, meaning that if you have $100,000, you're just putting $10,000 in each trade that we give out. If you did that, you have made 87.9% on the year. Think about that. You're almost at 100% by only putting 10% of your account in every trade here. You're almost up 100% on the year. That's mind-blowing. There's no hedge funds out there doing that, folks. This is the PPT methodology. Speaks for itself. Every trade third-party verified here. And look at what we trade. Most websites out there, they're BS because they trade microcaps, and they'll make 5,000% on one and then lose 100% on the next, 100% on the next, but it still looks good, right? Because they're still up like 4,500%. That's BS because, again, microcaps, small caps, penny stocks, well, yeah, I mean, you're going to hit one home run out of every 20 trades. The rest of the 20, you're going to lose all your money. Here, look at what we're trading. U.S. Steel, TNA, which is an ETF that tracks 3 times the long IWM, Russell. VLTC, VXX, TZA, QID, Pfizer, Skechers. This is the biotech ETF, Facebook. So notice the theme here. We're doing this percentage gain by literally trading large caps. Literally trading billion-dollar companies versus microcaps. And we're still making this. To me, that's the most amazing. 879%, that's awesome, yes, but it's the way you were doing it. All right, lots of other track records out there are fabricated. We have our third-party verified. Lots of other track records out there trade only penny stocks, so they claim, oh, I made 1,000%. Well, yeah, you made 2,000 on one trade and then lost on the next 10, 100%, every one of them. This is where the amazing point is. It's think about it like that. Think about comparing this to hedge funds out there, to money managers, to the best money managers like Carl Icahn. We're blowing him out of the water. Absolutely blowing him out of the water. All right, guys. Bottom line is, come here under Investor Trade Alerts Research Center. That's where you're going to find where we give out these trades. If you want options right here, you have the options alerts as well. These are our 2 main services. That's what you want to look for. Research Center, can't beat it because it comes with all these services included. Daily analysis video, daily market report, hot charts, which is where we give the trade alerts out, and the live broadcasts twice a week here where you can ask us questions, see our live charts, and so forth. All right, guys, enjoy. Come join us here at InTheMoneyStocks.com.